us.
Morning, John.
John's with us.
Okay, please stand for the pledge. I pledge allegiance
To the flag of the United States of America,
of America,
to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Please be seated. Mr. Ciccarelli is excused this morning, and Mr. Kilcoyne is joining us, as you can see remotely. May I have a motion to accept the agenda as submitted?
So moved.
Mr. Bodo, second.
Second.
Mrs. Oliver on the question. All in favor?
Aye.
Opposed? Carried. 3.1, we have a presentation from Randy Shepard, who is with the Bonadillo Group, so unless you have something to say,
I do not.
I'll turn it right over to Randy.
Morning.
Okay, great. Thank you. Good morning, everybody. You do have a number of documents in front of you, I believe, at the table. We went through those documents in great detail Wednesday with the audit committee, and Dr. Costello was there as well. So we went through them. I had a very good discussion, throughout the morning about the information. So the intent here is I put this little quick PowerPoint together just to go through high level for you. I'm happy to answer any questions that may come up. We'll really just kind of touch through on some of the high points of the results of the audit. So in terms of what we did, what we were hired to do is we issued opinions on the financial statements for both the district-wide and extra classroom. We did have unmodified opinions on both of those. And we also issued within that opinion on the district an emphasis of matter paragraph, which outlined and talked about errors or corrections of errors on the June 30, 2024 audit. And that's related to prior period adjustments that we had. And then in terms of, the Yellow Book report, which is the government auditing standards report, we did have a finding related to internal controls over financial reporting, which really was a continuation of a finding that was in the prior year statements as well, related to the material audit adjustments that we had. So those were in there. We outlined that, and there's management's responses included in that document as well. And then we had a second finding related to internal control over compliance with the fact that the district had an overspending of the general fund budget this year. We provided some commentary relative to that as well. In terms of overall management letter comments or control matters that we identified, as I mentioned, there's two material weaknesses. Those are in that report are the same two that are in the Yellow Book report or the government auditing standards report. We had three other matters that we brought up. One related to the debt service fund. There is a significant balance of dollars in that debt service fund. It hasn't really been reduced or taken down over the years to pay the debt service that has been in place. And so our recommendation and suggestion there is to take a look at that to identify if you have been making debt payments, which I think you have, and whether any of those funds sitting in that debt service fund can be released or removed out to the general fund or to fund future capital projects. And I think you're working with your bond counsel relative to that. Capital project accounting, what we noticed there is there's a number of capital projects that are older, that are still sitting open in that fund that probably should be closed out because those projects are complete. So there may be a project reconciliation that needs to be done to determine if there's any deficiencies or any excess funds that again can be returned to the appropriate area that would have funded that, whether it be the general fund or whether it be monies that should have or could have been used to pay down debt service. And then the last item for the district that we identified was capital asset tracking. Essentially, the district just needs to, they use BOSI software right now to track capital assets, and there's also an internal accounting spreadsheet that's used as well. Those were not in line with each other, so it took a little bit of time to determine what the appropriate numbers were. So our recommendation there is just to make sure that either you utilize that software from the BOSI's and make sure that's complete, or you utilize the software internally that you have because you're paying for the BOSI software and not internally. So just making sure that you've got the right data. And I do believe that the business office is working with BOSI's right now to kind of correct and see what's going on within that software. And then from the extra classroom perspective, we have 4 matters that we identified. One of them relates to just some missing signatures. And what I did say at the meeting on Wednesday, and I'll repeat here, is that overall, I think the way the extra classroom funds are operating are very good. We generally see a lot more problems in these areas within our districts. So we had, there's a few signatures that need to be there. Either the student treasurer has to have signed, the central treasurer, as well as the advisor. So on a few forms, one of those happened to be missing, in terms of the approval process. So it's not like there was no signatures, but there was just one of them was missing in one case or another. Another item we identified was that there are a few extra classroom level activity clubs at the elementary level. And in the guidance that is issued by New York State, it's not clear whether those are permitted or not permitted. So our recommendation there is just to take a look at that, determine definitively whether they should or shouldn't be there, and then just make a decision going forward and make sure you have the right controls in place relative to those. Inactive clubs, there are a few clubs that had no activity this year, and our recommendation there is just to develop a process whereby you're determining, are those clubs still in operations, are they still needed? Because there are costs associated with having clubs open. You've got advisors that are being paid. And so if you're not using those clubs, you want to make sure that you're expanding them. And then lastly, the bank reconciliations and supporting records. There were some inconsistencies between the software, the subledgers for each of the clubs, and the bank balances. So there were some reconciliations that needed to be done there. And we recommend you clean that up a little bit. One more thing on this slide, and then I'm going to share another document with you. The timeline for completion, we do we will be issuing the district and the extra classroom financial statements next week. We're wrapping up one of the steps internally that we have is a second partner review that reviews the entire financial statements to make sure that all the standards are covered, et cetera. We should be getting that back today, and then we'll go through that process to issue next week. The single audit still remains outstanding because the federal government has not completed or issued their compliance supplement, which is the guidance that tells us how to do these audits. So there's no deadline in terms of when that's coming, but we will complete that when we can. The ultimate due date of the single audits are 3/31/26, so I think we have plenty of time, but not knowing exactly what the government's going to do, I can't predict that specifically. And my guess is if it's late, in terms of getting that compliance supplement out, they will obviously extend the due date of that report. So let me just open this other document. And this one is in front of you as well. It's called a Required Communications Letter. It might be easier to see in front of you than on the screen. But what this document is, as the name implies, it's a required communications letter, things that we as the audit firm are required to communicate to the board. And as you remember, we do work for the board, we don't work for management. So it's important for us to have that relationship and have this communication with you as the board that's responsible. So the way it's laid out is there's a bold caption. Underneath that, it explains what that is trying to talk about or what the category is. And then beneath that is an italicized bold section that is our response to that. So what I'll start with is that accounting practices. So management is responsible for selecting the appropriate accounting policies to use and making sure that those policies are consistently applied from year to year. This year, there was one new accounting standard, GASB 101, related to compensated absences and how they were recognized and recorded. And so we worked with management to make sure that that was implemented. The impact of that wasn't significant, so we recorded the change in the current year. One of the biggest differences was making sure that you picked up what are called salary-related payments. So the FICA costs associated with those that time had to be picked up as well. So we identified that. Otherwise, there was no transactions or no changes to accounting policies for the year. The second item talks about accounting estimates and the fact that accounting estimates exist in every set of financial statements. The significance of them varies by district and by entity. We've identified 4 of them, 2 on this page. One relates to depreciation expense. So your estimated useful life of your capital assets is an estimate that we look at. The estimate of your net pension liability, that actually is your share of the state pension system. You don't actually have any control over what that number is, but it is still considered an estimate within your financial statements. At the top of the next page, the other 2 that we identify are your other post-employment benefit obligation. So the cost of retiree health care that you provide, that is an estimate. And then lastly, the compensated absence calculation is an estimate. It's using pay rates in effect at year end, time estimated, unused time. And our responsibility here is to evaluate those methods, the assumptions, and all the data used to developing those estimates, and make sure that they're reasonable in relation to the statements as a whole, which they are, and they were. The next item talks about disclosures that are sensitive, and sensitive has a couple different definitions. In case of the district, the 2 that we've identified here are your pension estimate and your other post-employment estimate. They're sensitive because they both are actuarially based. And so when you have an actuarial calculation, you can change certain assumptions very small, like a discount rate, et cetera, and it can have a significant impact on the value of that liability. So that's considered sensitive. But we make sure that all of those disclosures are consistent, neutral, and clear to the user. The next one talks about difficulties encountered in performing the audit. As I said at the outset, we work for the board, so this is kind of our ability to respond to you and let you know how did the audit go. This was our initial audit, and as I kind of alluded to when we talked about the financial statements, we did have some issues with the opening audited fund balance in that position, and we booked several restatements to ensure that those were correct. And we also had a number of current year audit adjustments. So things took a little bit longer than anticipated, hence the need today for this special meeting. But we did get to, I think, a very good place. I think we were able to work with management to identify areas that they may have not looked at as closely, or things to improve their processes going forward. And so I do think that we're in a very good place heading into the next year's audit. At the back, at the last part of this report, we'll look at some adjustments. So we're required to disclose any audit adjustments that we identify as part of the audit process, and those are all attached. If we had disagreement with management relative to any accounting matter or reporting matter or auditing matter, we would need to disclose that. But everything that came up, we were all in agreement with. We were all on the same page, and we made the necessary changes. And we have letters from what are called representation letters from management that allow us to issue these in final form, and those will be dated the same date as our report. So we do have those. And basically, that representation letter, and that's been signed every year, as part of the process, as you say, we've given you everything you needed. Nothing has changed since year end that might impact your opinion, or might change your opinion, and so therefore we authorize the issuance essentially. The top of the third page here, management consultations with other independent accountants. That's called opinion shopping. What that would be is if for some reason we said you should do something a certain way, you didn't think that that was the case, you went looking for some other firms and tried to determine what they would say. that's called opinion shopping because they may not have the same information or the same support that we would have or that we're looking for, but we're not aware that that happened. I actually haven't seen that in my career, so very rare. And then the rest of this page just talks about the different components of the audit and financial statements that are in there and the procedures we perform. So I'm actually going to jump to the exhibit, which is where the journal entries are. And we'll talk through these briefly. Again, just giving you an understanding of what this exhibit is intended to do. There's no prescribed format of this exhibit. The way that our firm does it is we like to show what the unaudited number was that we received as part of the audit process, in case maybe you had seen preliminary figures. And it'd be an ability for you to kind of walk through it. And then we summarize adjustments that were given to us by the client, by you, and we put them all in, and then adjustments that we identified as part of the audit process to come to the ending number here by fund that you can trace directly to the audited financial statements. So you can see we started the audit with about $7.8 million negative change in that position, fund balance. And there was a number of adjustments booked by you folks. A few positive ones here to record the sales tax from the county. That's just a normal accrual that we book at year end, as well as the BOCES receivable, which comes in after year end. And then a few adjustments we identified as part of the audit process is reconciling state aid to where it should have been for receivables and revenues. And then we identified a correction in terms of how employee healthcare contributions were being recorded. They were being booked into liability, but never relieved when those payments were being made. So expense was being hit twice. So ultimately we started, as we said, it was a $7.8 million negative change in fund balance. Now it's down to a negative $3 million change in fund balance. Still not great, but again, closing up and reconciling the books got that number down. Capital Projects Fund, really not much of a change. A few big adjustments on both directions, but we entered about the same. There were some accounts payable that the district booked after, as they were part of the close process. And then we had to make some corrections to how the ban was recorded, as well as we made an adjustment, and this was a appropriate adjustment to move expenses out of the current year and back into the prior year because it should have been part of the June 30, 24 audit. School lunch fund, few adjustments here. The biggest one really being booking the healthcare insurance allocation over to the school lunch fund. So the cost of that was about $70,000. And then we had to make some adjustments to reconcile the revenue to the state, to the supporting documentation. So those two are the biggest pieces of the adjustments in terms of where the school lunch fund ended at the end of the year. Special aid fund, you can see all these adjustments are client adjustments. So this wasn't fully reconciled when we started the audit. And so we held off on really doing any audit work there until those are reconciled. We had several discussions with the team, throughout that process. But you can see ultimately, special aid fund should be zero because all the revenues should match all the expenditures that are incurred. So that puts that back at where it should be. And then the last few funds with adjustments, the debt service fund, a few things here. The correction we made to the ban that I mentioned earlier, this is the other side of that, impacting the debt service fund. And then we had to allocate my class interest to the right fund. It was incorrectly allocated into the debt service fund too much based on a formula error through the year. So this fixed that, made that correction. And then small adjustments here related to special revenue fund for picking up the activity for the extra classroom funds as well as scholarships. And then we had to remove the scholarships from the private purpose trust and move them into the special revenue fund for the district, which is where they should have been. And that handles that report. So again, we did go through all the rest of those documents in detail. But so if there's anything that I didn't cover, anyone that was there Wednesday, I'd be happy to address that or any other questions.
Questions, anyone? No, I think you've covered everything quite well, Randy. We thank you for tuning in this morning and going through this with us. Anything
I
from
do
you?
not.
Okay,
Yeah. Great, all right, so I will sign off here and, we'll talk to everyone soon, thank you.
thank
All right, Randy,
you.
take care. John, are you good? John Kilcoyne, you're good? Yep, okay.
All right, bye-bye.
All right,
Bye.
Randy, take care.
Thanks again.
Okay, that will take us to 3.2. Resolved upon the recommendation of the Frontier Central Audit Committee, the Board of Education accepts and files the external audit prepared by Bonadeo and Company LLP for the fiscal year ending June 30th, 2025. May I have a motion?
Moved.
Mrs. Oliver, second.
Second.
Mrs. Hefner on the question. All in favor?
Aye.
Aye.
Opposed? Carried. 3.3, resolved upon the recommendation of the superintendent, the Board of Education of the Frontier Central School District hereby approves the attached corrective action plans year-end ended June 30th, 2025. May I have a motion?
So moved.
Mr. Bodo, second.
Second.
Mr. Cordier on the question. All in favor?
Aye.
Opposed? Carried. Now I need a motion to adjourn.
So moved.
So moved.
Mr. Kilcoyne, Mrs. Hefner. Thank you all for being here. All in favor?
Aye.
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 Opposed? Carried.